I want to ask what the key metrics we should be following this season are, but one person said it's all credit, credit, credit.
It certainly is, and part of that is just frankly because our normal metrics we care about, earnings per share, we just have such little clarity on what exactly they will be. Some estimates say that they'll miss 20 to 30% off of what Wall Street is currently forecasting. So in that environment, as you say, all about credit, it's going to be about that balance sheet and just how much is set aside for credit losses. So loan loss provisions take utmost importance because they give us a sense of just how severely the economic turmoil is going to be impacting individuals. And investors, they're set up to see an earnings issue, but not set up to see a balance sheet issue. So if banks are gearing up for bad debt, that's going to be problematic. Not to mention that more money set aside for loss of loan loss provisions means less money for dividends and buybacks, which already have been under pressure, Nara.
Exactly, and I guess investors are going to look to see whether US banks follow what we've heard from European banks in terms of some of the commentary around dividends and buybacks. And Dani, usually trading revenue, trading results are of intense focus during banks' earnings season. How's that likely to play out this time round?
Yeah, this is likely to be really interesting this quarter because we're likely to see a pretty stark dichotomy between winners and losers. So on one hand, you have the winners, the banks that benefit from the high volatility, that equity volume that really gets swept up from it. Then on the other hand, you have all of these banks that are stuck with high-yield bonds and leveraged loans, and there you know as well as anyone just how wide spreads have gotten. So that's likely to hurt a lot of banks. Oppenheimer is estimating a drop of 16.5% in trading revenue, but we could see some bright spots like Citigroup, a large equity derivative trading desk, which of course was an area of strength, a lot of hedging going on by clients. According to people familiar, by early March, Citigroup was hundreds of millions of dollars ahead of last pace. And just another factor we're unsure how will play out is the fact that many traders are working from home. That's something we just frankly can't model for, and we'll need to see how that particularly plays out, Nara.